And what's great is gold hasn't looked back. It's had a little correction. It's down about 4% from its recent high, as you and I talk. But the average correction in the last bull market was 12%. So there could be more correction, and it would be completely normal. But I'm convinced, I believe like you, that this is a new bull market, and we're in the early stages of it for sure.
Special coverage of the Deutsche Goldmesse is brought to you by Victoria Gold Corp. Hello and welcome back to Soar Financially, and welcome back once again to the Deutsche Goldmesse here in Frankfurt. We're at the Westin Grand Hotel, just back in the back of the bar, and I'm joined by Jeff Clark. He's the gold advisor, and Jeff, I'm extremely honored that you made the trip to Frankfurt all the way from Sacramento. Thank you for coming.
I'm glad to be here. I'm loving this conference. I love the boutique nature of it, where it's a little more personal, a little more intimate, where you can get to know investors and companies on a more personal basis. So I think it's great. It's very productive.
Fantastic.
So hats off to you.
Thank you. Well, stop making me blush. We're on camera. You can't get that off. Like, no filter will fix that. No, I appreciate it. Like, it wouldn't work with speakers like you coming out and supporting, obviously. But let's talk gold.
Yeah.
You know, we last spoke at the end of January, I believe, and gold started moving only in March. Instead of the treaded Paydirt curves, it was the opposite.
Right. Exactly.
Meaning, like, what happened? We have to maybe analyze that a little bit and get to the nuts and bolts.
Yeah, you know what? When you look at when this gold price momentum started, it was actually leap year day, February 29th, when it started, because the day before the Fed hinted that, well, we're going to be lowering rates 4 times this year. Now that's since changed, but that's what started this just barely 2 months ago, right? And gold took off. It hit new highs, and it didn't look back, as we all know. But I think what happened is that forced a lot of short sellers to suddenly scramble and have to start covering. I love that. But then you had some momentum chasers jumping in there and that sort of thing. So, and there's a lot of other factors that probably contributed to it. We actually don't know the full reason why, but I think that's what kick-started it. And what's great is gold hasn't looked back. It's had a little correction. It's down about 4% from its recent high, as you and I talk. But the average correction in the last bull market was 12%. So there could be more correction, and it would be completely normal. But I'm convinced, I believe like you, that this is a new bull market, and we're in the early stages of it for sure.
Hey guys, pardon the interruption, but we're giving away one of Jeff Clark's books. Do you want to become a better gold and silver mining stock investor? Of course you do. We're just the beginning of a massive cycle. Make sure you're a follower here of this YouTube channel and follow me on X. Comment DGM 2024 down below so that you qualify to win Jeff's book. We will reach out to you in about a week's time. Thank you so much, and let's get on with the program. Gold is a 5,000-year-old relic, right? Are you surprised in the violence of the move? Like from 2,000 to 2,400, that's a 25% move within 6 weeks.
Right.
That is massive. Are you surprised by that?
It's happened before, gold cycles. We know that gold also surges. It has surges and corrections. It has spikes just like silver, and pullbacks and drawdowns and all that. So it's surprising to us because we haven't seen it in a while. But historically, gold has done this many times.
Okay. Well, we have to take a look at it. Maybe I'm curious, how are you looking at gold differently now, maybe? Because it seems like not all the same, we call them factors, have the same impacts anymore. We still have a strong US dollar.
Right.
We have rising bond yields, and gold is still hanging in there.
Right.
Do we need to look at it differently?
We have had no recession. We have stock market highs, and gold's powering higher. So I think, we're in this era where, we haven't been used to this kind of price action, and now this is what we're dealing with. I think the clock has started. For us investors, especially those of us who like junior mining stocks, I think the clock has started, meaning that the money always flows into gold first, then it goes into the producers, then it goes into developers on the way down to the juniors. So this is very typical, very common in history. I think we all know that. But that means the clock has started now, so it's a matter of time until that money trickles down into the junior sector and those stocks begin to move as a group.
Yeah. Well, gold is obviously decoupled from all those factors. So the question is, what has the biggest influence on gold now? Is it geopolitics? You mentioned momentum chasing. Is it technically driven? Is it the macro, meaning is it the Fed? Is it the US debt situation? And so I'm looking for okay, what should we pay attention to now, since it doesn't react to the things we thought it would react to?
Those things have been there for a long time. And gold didn't move that much with them. Or it'd make a new high and then it would pull back. It would peak its head above a new high and pull back. This time it didn't, and yet all those same factors are still there. So I think the Fed had something to do with at least kickstarting it. Central bank purchases probably are supporting this move because they're at record high levels. Despite them being net buyers for 12 plus years, they're still at record high levels now. Chinese gold buying has been very aggressive. I think all these things contribute to it. I think there was some short seller covering in there. But I think, like Brian London mentioned in his talk, we really don't know the core reason why gold made this such a violent move in such a short period of time. But you know what? I'll take it.
Absolutely. I'm 100% with you there. Why complain? Right? Well, that brings me to the miners as well. Can't complain. They actually started running as well. GDX, GDXJ are up. On a 12-month basis, we're still down, but year to date, we're up about 10% on the GDX. How do you see the gold price trickling down there? How is it affecting the miners? What is it doing to the bottom line?
A lot of people are complaining about the miners, and I understand it. Not a lot of miners are not moving, but GDX and GDXJ are up more than the gold price was during this period. So there is some leverage there. There is some movement there. And again, I think for me, as someone who likes to invest in the junior miners, I really do think that is the theme. The clock has started. So I can't tell you when that clock is going to strike midnight and the money trickles down to the juniors, but I think it's coming because history says so. I have to go by history. I don't have to make some prediction or forecast, I just look at history. This is what has happened before. And hey, gold can't stay at that level for long before it starts impacting the market. And you're probably going to ask me about an M&A, but I think Q3 is the time to look at. Why? Because the gold price will have been higher for all of the quarter of Q2. It was only higher for 1 month in Q1. So we need a full quarter of earnings, and then the majors and producers are going to report strong cash flow because of the higher gold price in Q3. And when that news comes out, I think that's when we start to see some movement, and that may kickstart M&A, and which may in turn kickstart some money movement down into the juniors.
Well, we've already seen massive free cash flow increase, even out of the Q1 numbers, but it didn't spark anything yet. Newmont jumped 10%, which is a big move. It gave up a little bit of that on lower volume, which we want to see actually, because it's a good sign. But it hasn't really sparked anything yet. So we really have to wait for Q2 financials?
I think so, because Q1 only had 1 month of higher gold prices. Q2 will have 3 months of higher gold prices. And I think that's going to go right to the bottom line, right, of a lot of these producers. And so we've already seen the inflationary pressures. They've already been built into what's happened to the gold market and the gold stocks and that. We haven't seen the higher gold price, and now we have. And so I think that's going to have an impact on the producers in Q2 that report in Q3.
Well, the miners, or the inflation pressure, has actually been outpaced by the gold price gains. So we are increasing that. So costs have been creeping up. I think Newmont is producing at $14.39 an ounce.
Wow,
so it's really high.
Yeah.
But now gold has been even higher. So the costs are steady now, because I think they actually decreased by $10 or so by Newmont, from Newmont. But gold is now $400 higher.
Well, the theme with the gold stocks for inflation was last year. Now for 2024, the theme is higher gold prices. So the inflation's already built in. So it's the higher gold prices now that's going to make them more profitable.
Waiting for the first unions to go on strike, because there's more money on the, seemingly more money on the table, right? But you already talked about M&A, but what are some of the other factors or what could free cash flow affect as well? Like lots of money flowing into the system, but where is it going? What about exploration spending?
exploration spending could kickstart. I think it is cheaper right now for producers to buy ounces than it is to go out and spend money exploring and developing and building and that sort of thing. It's cheaper to buy. So M&A could kickstart this. A new discovery could kickstart this. If we have another Snowline, if we have another Hercules, in this environment with a higher gold price, that's going to mean more. So we've seen that in the past as well. In the 80s when the gold price crashed, but there was the Hemlo series of discoveries, and that kickstarted some tremendous returns in those stocks. So it could be any of those things that really kickstart this. But the fun thing is we don't really know. It could be anything because we still have a strong dollar. We don't have a recession, So the catalyst could be anything. It could be all the things we talk about, or it could be something completely different that we're not talking about.
Yeah. Well, I got on stage, and I'm going to put it on record here as well, as said the junior mining stocks have bottomed,
yes.
The junior explorers. I usually don't make those bold statements, but just based on sentiment and what we've seen organizing this event, I truly feel that. The question is now, for you, do you see that as well? Now the money's flowing into the producers. We're probably a few months away from the juniors probably
yes.
properly taking off. And would you agree with that?
Absolutely. I said it from stage as well, that I agree that the bottom is in for the juniors. It doesn't mean they're going to bounce tomorrow, no. But I do think the bottom is in. They've been beaten up for so many years. Last year, you remember going into the summer, they were really beaten up bad. And then all of a sudden, what happened? They fell 50% more. So a lot of high quality companies with high quality projects in pro-mining jurisdictions have seen their share price decimated. I think the bottom is in. I think this is the opportunity.
And one of the reasons I said that, to back up my statement a little bit, because we track the financing data from Oren Inc., we've seen record financings in 2021. It dropped off by about 30% in 2022. It kicked up a little bit in 2023. But what we're seeing is that juniors actually ran out of money over the last 2 years.
Yeah.
They raised a lot of money in 2021, especially the small companies, and it's taken 2 years to drain the kiddies.
Yeah.
And that's exactly what we're seeing right now. That's the backup for my statement.
Yeah,
right?
Very good.
And
it's great that you track that data, by the way, because it's very useful to the industry, and I think all of us can.
Oreninc.co, by the way.
There you go.
No, fantastic, Jeff. You were on stage this morning, had the opening keynote. What were some of the key takeaways that you want the investors to take away from your speech?
I had 3 themes. Basically, one is it's not too late to invest. Even though the gold price is higher, I've had some investors ask, is it too late? Well, the juniors haven't moved at all. They're still near all-time lows relative to the gold price on a ratio basis. Relative to the gold price, they're still near all-time lows, no matter what index you use. Secondly, the gains can be spectacular. Maybe even life-changing. I showed many examples of that from my book Paydirt that I included in my talk. Regardless of what decade and what the metal price was doing, there's been some spectacular gains. So history says we could see, especially from such depressed levels, it would be nothing for these things to double and triple and still be undervalued. So I think that's one theme. And then the third theme is how to play it, meaning that you're going to have to expect and watch for volatility and corrections. I mentioned earlier that the average correction in the last bull market was, believe it or not, 12% in a bull market. So don't get shaken out by those things. There are investors who actually manage to lose money in a bull market, and that's one big reason why they get shaken out, they get scared, and they don't know when to get back in. So just be mindful of the fact that history shows very clearly there are plenty of corrections, and they're not necessarily small, but that doesn't mean the bull market is over.
Maybe just to follow up on the gold discussion, just a question that popped in my head. Is gold too expensive right now?
Too expensive? Oh my gosh.
No, it's like based on, it's like if you were a retail investor and you wanted to buy some bullion, would you buy gold, or would you buy a gold coin at $2,300 an ounce right now?
The answer to that is, how much do you own already? If you don't own any, then you need to buy some. If you do own some, you can be a little more stingy. So that's how I look at that. But if you inflation adjust the price of gold back to 1980, all those adjustments, even using the government's own CPI number, has gold at a higher price. And if you use John Williams' Shadow Stats data, it's multiples higher. So I look at it like this. This is the very beginning of a new gold bull market, and therefore the gold price is going to go higher. I'm an investor. I want to capitalize on that. That's how I approach all this.
Phenomenal. Great closing words. Jeff, where can we find more of your work?
Basically at thegoldadvisor.com, everything is there, including my new paid newsletter, Paydirt Prospector, named after the book. It's been a lot of fun. I'm actually loving what I do, and lots of early stage opportunities there, so higher risk, but potentially much higher reward as well.
Phenomenal. Jeff, the investors loved your presentation. Thank you so much for coming out. Appreciate it tremendously that you made the trek across the pond.
It's been a blast. I've really loved it, Kai. Thanks for inviting me. It's great to be here.
Phenomenal. Enjoy the rest of your time in Frankfurt, and to everybody else, thank you so much for tuning in here to Soar Financially from the Deutsche Goldmesse. Tremendously appreciate you tuning in. Hope this was insightful. Make sure to check out the presentation Jeff gave. We'll put it up on the Deutsche Goldmesse YouTube channel. I'll link to it down below. And thank you so much. Leave a comment, leave a like, and we'll be back with lots more here from Frankfurt.